Welcome to Wealth Coffee Chats, folks, for your daily live updates. Get the most out of today's episode by participating in the chat. Make sure you ask some questions, be part of the conversation, have a bit of fun, grab a coffee or a tea, take some notes, and get ready to start your day, folks. Quick few housekeeping rules, though. No spamming, no advertising or self-promotion in the chat. That's not on. Be kind and respectful to everyone when participating. And most of all, have a good time. Real estate investing can be your biggest asset. It also can be your most expensive asset when it comes to getting it right or getting it wrong, folks. It can be time-consuming, stressful, and that's why here at Positive, we have what's called a 6-star team, a full-service team that provides integrated wealth and property investing solutions and services simply designed to help you progress towards your goal of passive income through your property portfolio, folks. Make sure you check out our other podcasts on the Positive Mentor Network. Not only is there Wealth Coffee Chats, there's the Urban Property Investor. Drops every Wednesday with straight talking investing strategies and lessons with Sam Saggers. Property Investor Tales. This is where our clients, you guys, share real life stories from property investing, hosted by some of our advisors and strategists. And that's done every fortnight, dropping every Monday. Wealth, Wine and Wisdom, folks, that debriefs the week that was in the world of finance and property, hosted by yours truly, Jason Witten and Andy Fenton on Fridays. Hey, good morning, folks.
Good morning, everybody. Welcome to another Wealth Coffee Chat.
Hope you're well, folks, wherever you are.
There it is, team. Morning. Morning, wherever you're tuning in from today.
Early bird gets the worm, they say. Here at Positive, we offer a 6-star team. It's a team that help you at every stage of your wealth creation journey.
General advice disclaimer. The information provided is general in nature and does not take into account your personal objectives, financial situation, or needs. Before acting on any information, you should consider whether it is appropriate for your circumstances and seek professional advice from a licensed financial advisor. While every effort has been made to ensure the accuracy of the information, it is not guaranteed. It is based on our understanding of regulations and laws as at the publication date. As these are subject to change, you should talk to a professional advisor for the most up-to-date information. Any examples or illustrations provided are for illustrative purposes only and are not a guarantee of future performance. We do not accept any liability for any loss or damage incurred by reliance on the information provided. Any opinions expressed are subject to change without notice. Past performance is not indicative of future results, and all investments carry risks. Neither the hosts, guests, nor any affiliated entities accept liability for any loss or damage arising from reliance on the information provided. By listening to this podcast and viewing this presentation, you acknowledge and agree to these terms.
Good morning, everyone. Thank you for jumping on to another episode of Wealth Coffee Chats with myself, Alex, part of the financial planning team. So looking forward to bringing you, I guess, what is probably one of my top 5 topics that I love to chat about. And, you know, in this episode, we'll continue on discussing the asset allocation stuff that we've been chatting over the last couple of weeks. Please jump on and share your questions or ask questions in the chat. It'll be good to hear what you guys want to know. If you have any questions about the topic, that would be also welcome. See, I've got Kevin online. Good morning, Kevin, all the way from Florida again. Awesome. Thanks, Kev. Good to see you. So look, guys, let's dive straight into it. So asset allocation, right? So we've been chatting about it for the last several episodes. We are up to now the most active asset class in your portfolio. Guess what that is? And you probably would have seen it in the news recently, but it's the shares, equities. You know, there's many names for it, but equities or shares, it's the same thing, right? Which is essentially you're buying a piece of a company that is listed on any exchange, Aussie, US, Asia, Europe, etc. So if you love something like an Apple product, laptops, phones, etc., and you love getting the latest iPhone every year, well, guess what? You can get a share of that with your money. So there's various ways that you can get your hands on that. You can use your super, you can use your cash, you can do it through the family trust, whatever it might be. All right. So there's plenty of ways to get investing in this asset class. So we're now sort of going into a realm of more active, more volatile, more high risk, high return type of asset class, whereby you're looking at a company, you believe everything is going well, so the share price should reflect that as well. And typically that is not always the case, because whilst it's the most, I guess, traded asset class, I would also say that it's probably the most emotional asset class as well, because sometimes the way that the share prices are determined are not necessarily what the company is doing now, but where it will be in the next sort of 6 to 12 months. And, I had an example for you guys, perhaps maybe a month ago now, when I used Tesla stock as an example, whereby they've reported, and the numbers were one of the worst numbers that they've received over the last 10 years. And on the back of that, the stock prices has rallied. So excuse me, not the most not the most appropriate sort of way for the stock to perform, but sometimes things are not as they seem. So there's various ways. These like Apple, Tesla, Commonwealth Bank, things like that. These are direct equity, so you can invest into them directly as well if you like. However, if you don't want to be spending time looking at different companies and trying to understand what their financials mean, well, you've got access to managed funds, right? So these are the funds that are managed by a fund manager, right? So essentially they specialize in that field, and they put together a portfolio of investments or companies in which you invest into. So nice and easy. There's a fee attached to that. And there's different types of these managers. Could be active, there could be passive, so a whole lot. So today we'll just sort of just touch on the high level stuff around this. You can also invest into index funds, which is essentially just the entire group of companies in the stock exchange. So in Australia we've got ASX 200, 300, you can invest completely into that, right? And then the allocation of that is sort of divided based on the percentage of the company's weight within that sort of top 300. So for example, something like Commonwealth Bank might be 10% of that entire portfolio. And then, something like a very small company might be like 0.01% of that portfolio. So, typically speaking, overall, there's a lot of, I love this topic. I can talk about it for literally a day, maybe longer. But, just trying to give you like really high level dot points that you got to be thinking about. So, you've got blue chip. I don't know if anyone heard of that saying before. Blue chip are typically, your established companies, again, your banks, your miners, and whatnot. And people tend to think that, hey, look, these are nice and safe. They've been around for a long time. And then on the opposite scale, you've got small companies. They typically the ones that are just started or they're in the growth phase. So typically more volatile, and the return on them might be perhaps higher. Right, so I don't know if anyone remembers. Is it Afterpay? Afterpay. So during COVID, Afterpay was, I think, at $1, and then over that period it hit $150, and then it was bought out by I think it was a US company, right? So something like that started out as a small company, and then quickly grew and landed into the top league, right? So, but then quickly got snapped up by another much larger company. So, look, in terms of your portfolio, right? Like, what is this asset class? So, I just gave you like a very quick rundown on what equities are, but typically you'll probably see that this is your largest asset allocation. Last week I spoke about property, which is the largest asset class in Australia by itself, but you got to remember that most of that asset class would be sitting in residential property, right? So the next asset class that comes close to it is the equities. So if you are part of an industry super fund, you'll most likely have most of your portfolio sitting in equities. It's not going to say that directly. You'll probably say something like my super balanced or my super growth or something like that. So that naming convention is a little bit confusing because it doesn't tell you what it is exactly. So you have to dig deeper and go in and actually see what is inside of that investment option. So super important asset class for you in terms of asset allocation and composition, because it's an asset class that is super active. It's most likely going to be your most liquid asset. When I say liquid, that means you can convert it into cash very, very quickly after cash, right? So cash is always going to be there on tap, but it's not doing anything like what we spoke about a couple of weeks ago. So equities, gives you access to potential capital growth, right? So if the companies they invest in are doing well, then the share price should reflect that, but not always the case, right? Sometimes the markets can be irrational. They are very emotional, right? So we saw with what happened with Trump and the tariff announcements. I covered that topic a few weeks ago as well, and we saw what the markets tanked 15% within a couple of days, and then Trump put a pause on that, and then they rebounded within sort of the next couple of days, and I believe that they're now above that point from which they fell during that announcement. So you've got to be prepared to take on the risk and ride through the waves, right? So long term, it's been one of the best assets as well. So historically, you're looking anywhere between 8 to 10% return in that asset class. So it has to form part of your asset allocation. Again, it depends on where you are in your timeline, right? So if you are more on the retirement end, then you probably need a little bit more stability and income, right? So which means that you probably want to go towards the defensive side, perhaps, just depending on how you feel and how much risk you can absorb. Versus if you're sort of on a younger age, then you probably would want to look at equities, more growth assets. So equities, property, alternative assets, which we'll cover off next week. But one thing that a lot of people don't know or don't really pay close attention to, yes, there's, the equities can go up, by 10% in one day. It's huge, right? Because, for example, if I look at other asset classes like property, bonds, it may take a full year for that to actually eventuate. So the other thing that equities do, right? They also some equities give you a dividend. It's like almost like an interest, right? So a dividend provides an income from your investment. And the other thing that a lot of people don't know is that those dividends in some instances come with a franking credit, right? That franking credit is super powerful because it's super, I guess, a very difficult sort of topic to understand what franking credits are. But in a very simple terms, the company has already paid tax, and then that when they pay you a dividend, you've got a bit of a credit attached to that, and then the tax gets recalculated based on your tax rates, right? So if your tax rate is below 30%, then you get a bit of an extra sort of refund. But if it's above, then you have to pay a little bit of tax on top of it. But don't forget that the first 30% has already been paid. That's a very high level analogy, and I think depending on how everyone feels, and if it's something that you want to know more about, I can dive in deeper and cover that off for you. So yes, equities, huge part of your portfolio. You may not be aware of it because it's probably hiding under some other some name that the super fund is investing it in, or if you're already investing into equities, you probably either have your own portfolio of companies that you like and love and you want to hold, or you might have something like a Vanguard or BlackRock, the companies that offer that broader range of equities in one place. So when we sort of come back to this and in summary over the next couple of weeks, I'll show you how much of the percentage you would be expecting to hold in this asset class, because again, something I haven't covered off yet, but I've got on my notes here, is that not only are you investing in Aussie equities, there's a huge universe outside of that. You're looking at US, where all the major sort of companies are. You've got Asia, you've got UK, or Europe. So you've got Japan. You've got a lot of other markets out there. You've also got India. Potentially up and coming, or China 2.0 type of market, right? So there's opportunities in that. So the composition of these exposures will provide you with a bit of diversification across this asset class as well. So very important. You need to understand what this asset class does, what risks it has, and what potential benefits you can get out of it as well. So I'll leave you with that, right? So if it was too much info, let me know in the comments, or shoot me a text afterwards. I have been receiving texts afterwards just saying and asking questions, which is pretty cool. So please let me know. We've got potentially a few more episodes on this topic, and then we'll start diving deeper into each one of them, just to sort of provide a summary as to what this is all about. So yeah, thank you guys. I appreciate you staying and jumping on the chat. So I'll catch you guys next week. Thank you.
Thanks for watching another episode of Wealth Coffee Chat, folks. Make sure you like, subscribe, and turn on your notifications so you never miss a thing when we go live. Improve your portfolio and investing game, folks, with Wealth Coffee Chats live every morning at 8:10 each weekday. Make sure you join us. Previous episodes are also available wherever you get your podcasts, folks, as well as our other podcasts from the 6 Star team here at positivementor.com.au.